السلام عليكم. Okay, yeah, welcome. We are now 26 participants. We are waiting for the rest of the team. Okay. Please confirm that my voice is clear and my screen, I will share it after some time. So please confirm. I'm expecting Dr. Farah to join us. Okay, Dr. Farah should be here, so give me a minute. Dr. Farah. Dr. I'm sorry. I'm trying to reach Dr. Farah. She's saying she joined already, so I need her to. Please, Dr. Farah, can you make like a comment in the chat box so I can unmute your mic? Okay. Okay. Hi, Dr. Farah.
Hello, assalamu alaikum. I'm sorry, maybe by some reason that my name is appearing, my son's name, so I was not recognizable. I welcome you warmly to this session and all of the participants. Yes, am I audible? Are you hearing me? Are you hearing me?
I can't hear you, Dr. Farah.
I think the rest of the people are hearing, however.
Now I can hear you. Sorry, my. So.
Okay, so I was actually welcoming you, Mr. Ayman. Thank you so much for agreeing on giving us this valuable workshop. We really value your contribution to our university in making our students learn what financial modeling is and how we can use Excel. Thank you so much, and a warm welcome to you. Our students are so eager to learn from you today, and I really hope that this is going to be one of the very interactive and informative sessions for our students. I leave the platform to you, and we also have Ms. Huda with us. She is also one of the hosts. Ms. Huda Atasi is actually one of our faculty members who teaches financial modeling, and she could be a great resource for all the students and for also you, because I know you are very expert at delivering financial modeling, and to reach the student level and to give the right deliverables, she could be a great help. She's there, but I'm sure you know your pace very well. You can manage it all very well. And regarding the students, yes, I assure you that they are there to interact and ask questions and to learn from you. Thank you so much once again for your time and effort. Please go ahead.
Thank you. So, Ms. Huda, I unmute her so she can.
Thanks, Mr. أيمن. Thanks دكتورة فرح. يعني نحن كتير متحمسين. We are so enthusiastic to have to learn from you and to attend your section or your workshop. Many thanks for you.
You are welcome. It's my pleasure. It's my passion to help people to be better, to develop in their financial career, and I see a lot of people are joining, so we reach 61 participants. You are welcome all. I will be happy to know each one name and to talk together. So for the sake of our time now, we need to start the session. So first thing, the training will be, we will use the chat box for questions because we cannot use the mic for now. So let's start. First, to be a financial modeler or financial, let's introduce myself. Sorry, this is Ayman Ramzi. I am FP&A manager in Sahati company in Riyadh and Jidya in previous company. So I have like 11 years of experience. I'm ranking like the 8th of the world in competition of financial modeling. So my passion is working on Excel, and I like finance career and financial modeling specifically. I am also holding the CMA for the to have like also not practical, to have something else. So let's start with the basic thing to learn in Excel. So I shared the material. I'm assuming everyone having the same material which we have on Google Drive. I assume everyone downloaded. So I will start sharing my screen now. Great. So we will start with the basic thing in Excel, which is the shortcuts. What is the best thing to do in Excel is to be fast. Why we are using Excel? To be quickly finalizing the report or the analysis, whatever we are doing. So how to be fast? By using two things. First thing is to be using the keyboard better than the mouse. Keyboard is quickly 5 times more than the mouse. Using keyboard is 5 times. So here some of the shortcuts we need to know. So I shared that PDF with each one of you. So I'm assuming you have it. You can print it or you can use it now to see the shortcuts you need. I need to admit the participants to join us. Okay. So this is also another sheet, includes shortcuts. So for as we said, to be quickly using Excel, you need two skills to have. First one, to be familiar with the shortcuts. The second thing, to be familiar with cell reference. This is something inside the Excel we will learn today. So to be able to learn shortcuts, I'm not recommending to have this list and go one by one and keep Alt-Enter doing what? This blah, blah, blah. I don't recommend this way. I like to be practical more. So I like to practice the shortcuts. So it will be easy for you to work on the keyboard without looking at the keyboard as well. So let's go for practice. I believe everyone have the same Excel. I will open now. Let me share it with you. So you can see my screen now, right? So the shortcuts we have, this is a commonly used shortcut, but from my side and some of the financial experts they are using. So let's have a quickly some shortcuts. This is the raw data extracted from the system, for example, and we have to make it in a good shape to be able to make anything like pivot table or any formula to convert it to database. Now it's not database. There is a lot of spaces in between, so we need to fix it. On the right side, I need to show the keyboard shortcuts on the screen. So let me open the application for that. Give me a minute. So everyone will be able to see the shortcuts I'm using. Okay. for asking your questions. The PDF is on the Google Drive link, which is shared with Dr. Farah, and she's shared with every one of you. And recording will be shared after the session immediately on the same Google Drive link we shared together. So to be able to download it and use it. So let me do that here to show the shortcuts. So everybody will be aware of it. And here we need to do that. Let's see. So now we can see the shortcuts or the keyboard strokes. Okay. So now, first thing I need to do, I will make shift space. So it will be selecting the row, entire row. Then I will go same using shift, holding shift, and go down 3 times. After that, I will make control minus. It will delete the full row. Then I will go here, making control space, then control minus, without using mouse. This is the benefit of the shortcuts from the keyboard, like this. So now it's converted to database. I'm not sure, still there is something down. So I need to check it. How I can check? Here, control space, and I can see the month and the year existing in the filter. Going down, it's like that. So it's converted to database now. So I have 9,000 rows. Control home to go back to the initial stage. This is to show you the shortcuts. We have another shortcuts here to trace the formulas, to do a lot of advanced shortcuts. So you are not required to know them all now, but just it's included in the file which is shared with you, so you can follow up later and review. So let's go for the next exercise. After learning the shortcuts, the second thing we have to know is the cell reference. So if we go to the cell reference, we have an example to know how to create a basic formula on Excel. Excel is calculating for us whatever we need, like 1 + 1 = what? It's like calculator, right? But it's a little bit advanced more than that, but it's responsible for calculation. So the types of cell reference is a formula, like I make equal something. I will show it to you now. So there is 4 types of them: relative, mixed, or another mix, or absolute. So let's go for the first example, which is relative. By default, Excel making my formula as a relative. Like equal, if I do equal here, I need to calculate the net income. Net income for month of Jan equal total revenue minus total expenses, like that. So B2, which is the reference for the cell, minus C2, which is the reference for the cell. So this type of formula of this C2, it's relative. If I need it to be relative by default, so if I drag it, if I drag the formula, it will show C3, B3, C4, B4, so it's moving forward relatively based on the selection I did. So this is the first thing we need to know, the relative, which is the default in Excel. Let's go for the second thing, which is revenues. Okay, is budget revenues, and which is break down to reach the net income. And here we have simple assumptions. So it's all of them is a percentage of revenues. So how to make this link? We need to make the mixed formula. Okay, so if I make equal here for the COGS, 1,000, which is the revenues, multiplied with using asterisk. I believe everyone have this knowledge before. Asterisk, the percentage of COGS. Then I press enter. So this formula is valid for this cell only. I cannot use it anywhere. Why I cannot use it? Because if I drag it to the right, it will be 0 because it's moving relatively. So the mix here means the C3, which is the 1,250, I need to make it relative to move to the right, but I don't need to be relatively to down. So I need to make the C3 or B3 here freezed or locked. How to make it? Using F4. First time, it's totally locked. Second time, the dollar sign became before the 3. So if we have $3 sign, means the row here is locked. If I drag the B3 to down, it will keep highlighting the 3. So it's locked, which is I'm looking for. I need that. For the B, which is this cell, I need it to be dragged to the right if I move to the right. So I keep it without dollar sign before. So it will be relatively reference, okay? So this is for B3, it's done. B14, we have to make it column-wise, fixed, row-wise, moving. So I will make F4 3 times. So the dollar sign, if you can see, it's before the B. That's it. So now the formula, copy, Control-C, shift down to the right, then right, as you can see in the shortcuts on the right, then Control-V. It will work like that. If you go to any random formula, you can see it's multiplying the 2,000 into the 4.5. Why is this saving our time? It's saving our time because we don't need to make this formula for each column or each row or each cell. We have how many cells here? 36 cells. So instead of doing this formula 36 times, we did it one for all. This is the concept we need to have. One for all. Okay, so please, I need more interaction from your side. So please confirm your understanding so far by writing 100 in the chat box, please. Perfect. I need, yeah, more, please. If somebody have any question, please ask me. I would be happy to help. Okay, so let's move on. The next mix, which is I will keep it for now. I will go for absolute. Absolute means it's looked. I will try to make zoom. I believe zoom will be better for the screen. So it will be this magnifying. Here it is. So I believe we can see the screen now better. So let's go for that cell. So this cell saying I need increase of 5% for the prices. To do that, I need to say there's another cell here down, say 1.05. The magnifier made my PC slower, so I cannot use it now. So sorry for that. I will make zoom here on the Excel sheet. Okay, so here increase the price here 1.05, which is the 100, the original price plus 105. So I need to make here equal the revenues multiplied into the increase in the price. Then I press enter. It will show the increase. If I drag the formula, it will not work. Why it's not working? Because we have the same 1005. It's moving like this down and right. So how to do that? To fix it, I need the B11 to fix it with F4, one F4 only. So F4, now if I drag it, it will work fine. So here is relative, here is absolute. So if we go to the next mix, it will work. But we have question now from Donia and from Huda. Okay, Donia saying which are the difference between workbook protection types in Excel. So I will finish that exercise, Donia, and I will answer your question. There are some waiting. Okay, so sorry, I didn't see the admit list, the waiting list. So now I admit them. And another 4. So we reached 70 participants. Welcome everyone. I'm happy to have you here. So Huda, please, thank you for let me notice that. So this exercise for absolute reference is okay now. So let's go for multiplication table. Multiplication table, if you feel it's simple to do it, it's not simple at all. You need to, if you make it the 1 multiplied into 1 and drag the formula, it will not work because it's moving relatively down. So how to do that in a way, smart way to save my time in repeating that one? Okay, so we need to brainstorm before we did this formula. It should be coming from our hearts, not only, you need to understand. So the 1 multiplied into the column 1. So for the C, we need to fix it as a row. So if I drag down the C3, it will not move. But if I drag it to the right, I need it to move. So I will make F4 once, twice, and keep it like that. So 3 to be freezed, column to be not looked, so I can move forward with that. B4, which is that one, how to fix it? I make 1, 2, 3. So the B, which is the column, is looked. 4 is free to move down. Okay, so we can use the formula like that. There is another better shortcut we can use. Control R, Control D. It's taking the most left cell to the right. Control R, Control D, making the topmost row to down. Okay, that's it. So this is for multiplication table, how to make it with relative, with cell reference, whatever it's relative or mixed or absolute. Okay, so there is a question for the protection. So the protection here, protect sheet, protect workbook. So the protect sheet is protecting the sheet itself from adjustment, so I cannot move here. Like if I make here the protection 1, 2, 3, the password, and I repeat it again. Okay, so if I enter anything here, it will not allow me because the sheet itself is protected. But what about the workbook? I can delete that cell, that sheet, or anything I can do. So what about the protecting workbook? Protecting workbook here, I make the password also like that, 1, 2, 3, 1, 2, 3. So if I go here, I cannot delete, I cannot rename the workbook, the sheets down below here, if you can see. That's it. So this is the difference between protection, Dunya. So we have Maya asking for when assignment I made by Excel. Okay, so let's take this later after we finish the session. I will have quickly a meeting with you, or I will write down the chat about your question. Okay, Fem, I'm using virtual keyboard. Can you see it on the right hand? Like if I make Control C, it will show, correct? It's gone. It's gone. Okay. So let's repeat it again. So now I don't know the virtual keyboard is showing or not. Let me start the program, which is the virtual keyboard for me. Repeat it again, open it again. Sorry. Okay, Dunya, the most useful shortcuts, I showed you the last sheet, Excel sheet. Here. Yes. Okay, now it's showing, sir, correct? Yes, showing. Great, so let's come back for that. So this is the cell reference. It's the basic thing to learn about Excel, which is we learned today. This is the useful shortcuts, as we said. We can stick to those to save our time. So there is another shortcuts which is called the customized shortcuts. Here, if you have Excel open in front of you, you can go from this symbol, small, go to more commands. From here, you can go for all commands. It's called the quick access toolbar inside Excel options. Okay. So little bit hang. So here the commands, all commands included is in Excel, which is I can use. From here, I can make select and add. It will show on the right hand. The right hand saying the customized quick access toolbar. For me, I prefer best values, best formulas, best link, best formatting, because it's not easy to reach those shortcuts. It's not exist in this list. Like for example, if I have this 1 plus 5 equal 1 plus 5, it will show the result here. If I need the result only, so I will take copy. To make best value, it will be a very long shortcut. I will make Control Alt V. Okay, it will open this box. I will go down 2 times, go to values, then enter. It will make best value without the formula inside. It's a very long shortcut. So what I prefer to make it here above, like that shortcut. So Control C, then for me Alt, it will show here 3. So it will be Alt 3. Very simple and easy. That's it. Okay, this is the customized shortcuts and very important to learn, by the way. So, okay, Maya, I will answer your question. Can you explain how we can use Excel and mistakes? We should be careful about it and how we fix it. So if you have like database like that and you need to know, this is the next one I will show to you in the next Excel, which is the basic function, the minimum we need to learn about Excel. To be a financial modeler, you have to use Excel. So there is no software for that. even if there is a software, it will not be flexible like Excel. So that's why I prefer Excel. It's the commonly used by financial modelers. So I open now the other file. I'm not sure what is doing this writing. I think it's from the program, which is the virtual keyboard. So excuse me for that. Now I am opening the basic functions. Little bit slow. It's opening now. And Office 365, by the way, having a lot of new features. You will like it. So here we have a small expenses report. On this report, I need to make some formulas. So I need to do here the summation. So I will make Alt equal. The shortcuts is showing up here. Then enter. Okay. Then I will drag Shift to the right. Then Control R, like this. That's it. So that is equal sum formula. This is a basic formula. Another formula called the average, equal average, to know the average expenditures we have here for each month. So the shortcuts is showing, no need to repeat myself. So here is the average, Control R. But this one is a mistake. We cannot do average for advertising, rent, supplies. We need to do average, monthly average. Okay, so this is the concept should be. So here we can say the average and do the average formula AV. It will show like that. Then I will press tab. It will complete or continue instead of I do it by myself. Then left, it will show like that. Control Shift to highlight them all. Then Shift to the right. Then enter. It will show the average. I can drag the formula. It's a relative reference as we learned. And here, other than that, we need to use count. If I use count, same, it will show like that. I can drag. So it's 12 months. What if we have deleted that? It will show 11 months of expenses only. So it's dynamic formula showing us the results immediately. Also, we have minimum, maximum. We can use them also. Minimum. So it will show you the minimum here. Each expense, it will show also the maximum. Control R, like that. Okay. Okay, and also, what if I have, and so on, names here. If we have names, if we need to do count here, unfortunately, it will not work. Why? Because it's counting the number. So there is another count formula, which is counting the filled cell only. It's called count A. That's it. It will show how many persons exist here. That's it. Okay, that's it. So this is the basic function we needed to learn. I don't know from where it's coming, this one. So let's close the Excel. I believe something is happening. Hold on, please. Okay, so let's move forward to talk about financial modeling. This is the three basic things. Let's recap: shortcuts, cell reference, basic functions. This is the minimum requirements to start to be financial modeler. It's not a complicated thing. Don't make it like hectic on your head. Just make it simple and learn the basic in Excel and learn the concept to have it. So what is financial modeling? This is the first question I need to ask. So please, in the chat box, I need someone, each one to give me a brief about what is financial modeling, what is his info or what his idea about it. Because this is a new term, most of financial professionals, they're not aware of. So please, in the chat box. Okay, so financial modeling. Okay, so financial modeling is tool used to forecast the business financial performance in the future. So what is the meaning of that also? I don't understand. What is the meaning of this? So you have a company which is having like 5 years of income statement. So this company have like profit each year, 100,000, 150, 120, whatever they have in their net income balance. So the top management will come and ask me how much they will achieve in the future, how much the company will achieve as a profit in the future. So as a financial modeler, I should have the answer. So I should say 200, 300, whatever in the future each year. How to get this answer? Using something called financial model. This financial modeling being prepared above using Excel, Microsoft Excel. So the Microsoft Excel used to build a model for my company, customized to my company, to be able to forecast the company future performance. That's it. Using what or how I will get this info? Two things only to make it simple. I need to make it simple. Don't think a lot of it. It's a very complicated subject. Make it simple for yourself. You need historical data, which is the 5 years plan. You have the assumptions. And this is our topic today. Main topic is to not only discuss, but also prepare a financial model which exists in our data we have shared together. Okay, so we need historical data, which is the annual report. If you are aware about it, if you go any listed company website, you will find there is an annual report, exists the income statement 5 years back, balance sheet or a statement of financial position, you have the cash flow statement at the end. So all of them, they have in the annual report. So this is the annual report, done. So what about the assumptions? How I get the assumptions? So the assumptions should come from the business experts, like FMCG industry. Who should help me? Who should help me? The experts in the market. So I go to a company to help me in this analysis, to give me the assumptions about the market, how to do. Or if the C-level in the company, they have the experience, so they can help me in that as well. Okay, so this is the first thing to have. I'm not sure what's happening here. I think the program of on-screen keyboard is doing all of that, so excuse me for that. Okay, I close the program now. So let's go back. So I believe now it's okay. Okay. Okay, so more interaction in the chat box is required, please. So why do we building a financial model? As we said, corporate decision. The top management coming to me and asking what is the company performance in the future. We need to enhance our revenues. We need to do so and so and so. We need to know how many manpower we will hire, what is the extension we will do, open another factory, whatever. All these decisions I need to do as a top management or as a board member. I need to know the performance in the future, the forecasted performance. That's why I need to know that one, the first one. Second thing, okay, let me check. Hold on, please. I believe the issue is from the meeting. Yeah. Yeah, somebody is. Okay. How to disable the nomination? Yeah, I see it's allowed. Now I disallowed. Thank you. I love you also. Okay, so I disable it now. So thank you for your participation in the training. Let's continue. What can you help me? Tell me your name only. Okay, let's continue. I'm not sure how to delete that. Okay. Delete cleared. Okay, now we can resume. Forgive me for that. So we have first thing, the corporate decision, the project finance, corporate transaction, investment decision. Excuse me, please close your video. Please, no need for the video, please, from everyone. So this is our purpose of building a financial model. That's it. Okay. So the types of financial models, we have a lot. So first one, 3-statement financial model, which we will prepare today. The second one, discount cash flow model, merger and acquisition model, IPO model, a leverage buyout model, sum of parts model, consolidation, all of them, budget model, forecasting, option pricing model. So all of them, I will need to prepare each one to make a specific decision. Okay, so that's it. So let's move forward. This is the types we have. Can we go to the So thank you, Pipa, for your effort to make it done. So I'm sorry, I will be not happy to remove you from that training. So bye bye. Sorry. Sorry guys for that. So let's move on. So what is the financial modeling best practice? What we have to do? Okay. The key structure of any financial model, we have input, processing, output. To make it more practical, this training, I will not go for all the information like that. I need it to be practical. I'm not academic person, so I will go for practice more. So let's go for the first file we have. Let's go for the folder case study, please. And open the PDF we have. The PDF. It's opening now. Okay. Okay, so this is our case study. Let's think like you are working in a company. Consider that as a practical training. Don't think about its academic same like what you are learning from the books. So it's a case study from the real world. So we have this company, this financials in December 17. Okay, closing of December 17. We have here the content of what we have: income statement, balance sheet, cash flow, and the future prospects. We will talk about that one, the main thing, later. So we will start with income statement, what we have. Let's read the income statement. How to get this document for any company? This is my question. So please, I said that from 10 minutes back. So please, in the chat box, tell me your idea how to get this document for any company, for any shareholder company. So I need participation, please. Yes, Muhammad Masoudi, yes, perfect. From Tadawul website, yes. Or from the company itself. They are forced to, each company, listed company, they are forced to make it on their website. They have to post their financials every year. If not quarterly, by the way. Maybe sometimes they post quarterly and with analysis. It's helping, yes, and the annual reports, exactly. This is called the annual report, exactly. Thank you for your participation. So, so the first notice we have, we have complied with non-consolidated balance sheet, private company Inc. The non-consolidated statement of retained earning income cash flow, which is for the year end. We not performing audit. We have not performed audit yet. So it's a notice like that. So let's go for the practice. We have this private company for the year end December 17. So this is the revenues, COGS, gross profit, which is revenues minus COGS, expenses, we have it, break it down like that, total expenses like this, earning before tax, taxes, net earning. So this is the net profit we have. So the years 13, 14, 15, 17, 16, 17. So what is required from us? So we are required to this company to make 5 years expectations. Okay, so the 5 years expectations we need to do. We need assumptions, as we said. So we have this historical data. So we need to get the assumptions to be able to do the financial model for this company. So this is the balance sheet we have. Assets, liabilities, shareholders' equity. We have these figures. We will see it later one by one. Also 17, 16, 15 by each year. We have the cash flow indirect method, which is net earning minus plus depreciation minus change in working capital, investing, financing, and the closing cash balance at the end based on the transactions we have above. So it's coming from here, from the balance sheet and the income statement, and the closing cash balance each year 139 should be same of the cash balance exists in the balance sheet or statement of financial position eventually. So that's it for the case study. This is the historical. Okay, income statement, balance sheet, cash flow. So what is the third thing we need? The third thing we need the management discussion of future prospects. So you can remove this management discussion in any case and make it the market expertise. That's it. You can say the owners, whatever the assumptions should come from, based on the case, it will come from this guy. So here in our case, it's management discussion. So the management saying the revenue will grow with 10% for the next 5 years. Great. So to know how much the percentage, the growth in the next time. Okay, so how to do that? We will do that using the first thing. We need 100. We have 100,000, for example, and we have 10%. So the next year will be 110. Next year will be 121, and so on. So it will be incrementally increasing. So this is called the incremental budget or incremental forecasting, based on that one. So thank you. So for understanding that concept, we will go now to practice on Excel. I need it step by step. So we will practice on Excel how to get the revenue growth first. Then we will go for break at 7 exactly. I think Isha prayer after some time. Let me check. Yeah. So 7 exactly, we will go for Isha prayer, and we will come back after 10 minutes, exactly at 7:10, to continue what we have done and to continue what we have to do to reach the financial position at the end of this period. So let's go for the Excel sheet and make the assumptions. The Excel sheet is opening now. Okay, so first thing we need to do, we need to take the raw data, okay, from the PDF and convert it to Excel. How to do this? Let's go for example of income statement. This is an income statement. What I will do, I press I'll press Alt, hold Alt, and highlight the range you need to take copy, then Control C. After that, I'll go for my Excel and go to this cell, for example, Control V. So it will come like that. I cannot take it fully because it will not work. I need column by column, like that. Control C. Go here, Control V. So it will show revenues this much, cooks this much, and so on. So I need to align it to have the net earning 39 in front of each one in the Excel here. Okay, so 150 is the revenues. COGS is this much, gross is difference between them, expenses, and so on. That's it. I need to confirm. Okay, otherwise you can take it manually. Okay, like this. So now I take the first year of 17, I can move it here, then I go for the other year. So this is example only for taking the raw data. To save the time, we did that here. We did this to save some time. So we have income statement each year, balance sheet, cash flow. This is the first thing. The second thing, we need to learn how to build the layout from scratch. So here, the assumption sheet, we have this assumption, we have this structure. If you go to working capital schedule, we will learn what is that at the end, and after some time, you will see it's like that. If you go to fixed asset, it will be same. You notice it's the same. How to create it? So the layout, I will start to highlight this area, for example. First, I need to go view, remove the grid line. This is the first step. Second step, you highlight this area, for example, in whatever the color you like. For example, this color. Okay. And the remaining area, the forecast, you highlight it in orange, for example. I like this color. Okay. So here you have the years 13, 14, 15, 16, 17. Okay. And let's make it in white. So it will show in the background. Make it bold. Make it in the middle. Okay. Here we can go for 18, 19, 2020, 2021, 2022. So now we have 5 years. Enough. So I need it also to be bold, white, in between. Okay, we have ready-made already the layout, but just I need to do it again in front of you so you will be able to learn how we are building it from scratch. I started from 0 till we reach that one. So this is the first thing we need. Here, I will take them down. So I can write here, historical. Okay, and make merge for that. Then enter. Here we can say forecast and merge and press enter. That's it. I can make it wide from here. I can make this wide from here. I can remove this extra line. I can go to this line and highlight in blue, baby blue, for example, or any color. And I say the title of this sheet, which should be in our example layout. Okay. Like that. We make it in the middle. We make it bold. We make it bigger like that. So this is the layout, and underneath that I can do the assumptions we have. I can do the working capital. I can make the income statement here. We will see all of that in the next session after the break. So let's take Aisha prayer break and come back to continue. Okay, thank you guys, and waiting for you at 7:10. Exactly sharp, we will start again. Thank you. Okay, I'm back. Please confirm with 100 if you can see me and you can hear me well. Let's continue now. Yes, please. Okay. Let's start. Okay. So, any questions regarding how to build your layout on Excel and how to get the raw data from PDF? Please confirm with 200 that you understand it. If you have any questions, please ask me now. Thank you, Omna. Thank you, Jude, Layan, Dalia, Amna, Ruba. Okay. Only ladies are replying? Yes, Abdullah. Yes. Thank you, Muhammad. Yes. Okay, so let's continue. Let's go back to the PDF. So what we said, the last thing we need to convert from the PDF annual report, convert it to Excel here. So this is what we have done here. We have raw data, exist of income statement, balance sheet, cash flow. To move forward, we need to go and make another template here called income statement. So this Excel sheet, I need to fill here the historical financials. So I will remove this row. Okay, and go to revenues equal, and I go to raw data. It's sorted, well sorted. So I will take 13 relatively and move to the right, Control R. That's it. For COGS, I will say equal also, raw data, taking COGS to the right, and Control R. Now I need to ask, shall I go link gross profit to the raw data? Absolutely not. I should say revenues minus COGS like this. And I will drag the formula to entire range like that. Control R. So the formula like this will be working. So expenses is a header, separator. So we'll keep it as it is. Salaries and the benefits expenses, I will do like this, page up. And I will go to salaries and benefits here. Select, then enter. So now I am converting the P&L in a good shape until the historical only. So let me do separator here. So will not be get confused. Control A, Control 1, then border. From here, I make it like that. So I have separator between the actual and forecast. That's it. Let's go for rent. Rent from raw data, that one. So it's the same order, so I can go like this, Control R, Control D. So it will be depreciation coming from depreciation, but you find the this order happened here and the formatting, it's not working. So I will make undo, Control Z, undo, Control Z. Then I take that one. And here the beauty of Excel will show by using Alt 4. For me, Alt 4 is best formula, that one. Best value number 3, best formula number 4. That's it. Total expenses, I will make Alt equal, then press enter. Okay. Let me see why the keyboard not showing. Okay. Yes, it's showing now. So let's take that right, Control C, then move it all, best formula Alt 4 without affecting the total expenses. Earning before tax here will show total gross profit minus total expenses. And also Control C, Alt 4, taxes will be from raw data as well. It's only historical data, no need to do any calculation here, and I will link it to total taxes. Control C, Alt 4, net earning equal to earning before tax minus taxes, and we need to drag the formula for the total. Let's check. First year, 2,400. Let's go to the raw data. Yes, same number. We have same number here, same number there. So we can confirm the P&L is as is. So now let's go to link balance sheet as well. Equal raw data, cash balance. Let's take it. Alt 4, which is based formula. Let me do it for you manually by mouse like that. FX, which is based formula without affecting the formatting. Okay. That's it. Let's go for total assets. Total assets Alt equal, then enter. Alt equal is the shortcut as we said last time. Okay, so I have a question. Okay, so let them enter, admit, that's it. So please confirm with 300 that we are aligned with the same we have. So please in the chat box, confirm to me that we are aligned. Let's go for accounts payable. Accounts payable, I go to raw data, take it from here, enter. Okay, equity. I might be a little bit fast, so everyone will be with me. If they ask question to slow down, I can slow down. Okay, copy paste here. Shareholders equity total. And no worries, I will repeat I will share the recording after we finish, inshallah. So total liabilities and shareholders. We didn't do the total liabilities, so let's go back and do it. Okay. Total liabilities plus shareholders equity, that one plus this one. Alt 4 like this. So that's it. So confirming with 300 will be much appreciated. And I'm admitting the new participants who needs to join. Okay. Yes, thank you. So let's continue. This is the balance sheet. the statement of financial position. What is that check? Check means I need to check the total assets equal total liabilities plus shareholders equity or not. This is the main accounting and the finance formula. So equal that one, equal this one. Okay. Sometimes it will show false because of some decimals difference here, because it will have a little bit small difference. So what is the solution for something like that? The solution is, I will say if function here, okay, if, open a bracket, if, open a bracket, equal that minus this less than 0. Okay, so let's make it in brackets. Okay, so I will convert it to EPS, which is absolute value, which means the difference, if it's minus 2, I will convert it to positive 2. If it's a positive 2, it will remain positive 2. This is the APS formula. Okay, if this one minus that one less than 0, which is less than, I will make it 1. The difference 1 is acceptable. If less than 1, then it will be true. If it's not, it will be false. I will close the bracket, then enter. So it will be true. So that one will be for all. This is like checkpoint. So this checkpoint need to be highlighted here. So highlight from conditional formatting. I will highlight it. Okay, that contain, text that contain. If it's true, I will highlight it green, enter. If it's false, from here, text that contain false, I will make it in red. So let's check here. If it's this one, 1, 2, 4, any number, it will show false in red. If we Control Z, go back to what it was. Okay, so this is for balance sheet. We fill the historical balance sheet as well. We need here to fill the cash flow. The supporting schedule is not needed here. We can delete it and go up to cash flow. Net earning equal to, okay, I will go here, raw data. Here, net earning, I will take it from here and I will take it until we reach the historical. Alt enter. Like that. Investment from raw data, this line. Okay. Okay, here we need to drag it. Investing should be the total and should be for all. We are fixing the template now, so it will be helpful next time. So here, let's go for financing activity, issuance of debt or whatever. Take that copy, paste formula here. Alt equal as usual, enter, drag the formula like that. Okay, so net increase in cash or decrease, we will take the 3 cash balances: cash from operation, cash from investing, cash from financing, 3 of them. So here, whatever, if it's a minus, it will show minus. Here, if it's minus, it will show minus. Okay, it's a positive, it's showing positive. The opening balance, I need to check raw data. The opening balance is 0. Great, so I will make 0. Then here, the closing balance will be the opening balance plus the net increase or decrease in cash, and I need to drag it. Here also the opening balance should be the closing balance of the previous period, which is in year 14, the opening balance should be closing of year 13. I need to drag it as well, so it will show like that. So the checkpoint I need to do here, I need to say equal the closing balance of the cash minus the closing balance here, the cash here, this one. Okay, it should be the same. So the question is why it is not the same. It should be 67. Why it's showing 115? So there is something wrong. We need to figure it out. How to do that? We will go here. Net earning, this one, blah, blah, blah. So the mistake here, so this is the benefit of checking error. I think somebody asked me in the chat how to figure the wrong and the check errors. So part of it to make the checkpoint here, and another checkpoint we need to do it in the cash balance. So now we figured the mistake. So this mistake we did on purpose to show. So here, the net earning depreciation, it's not working like that. It should be equal net earning plus depreciation minus working capital, and enter like that. And we can drag the formula. This is the first thing. What else we have to be identified issues? So let's check. Raw data 12,971, 12,971. It's correct here. This one 15, this one 70, this one the total. So let's check here the raw data. This one plus that plus this 76. Why is there 30 difference? We need to check in the PDF. If you can see here, the closing balance is 139 because the opening balance is 11,111. So here, and there's no investing. So from where this this is for year 17. I need year 13. Here 67, 12 plus 15 plus 70. Not plus 70. Wait. Here this is minus. It's minus the 15. We add the 15. We need to remove the 15. So here, investment in property and the plant. Okay, for this one, we need to make it minus like that, minus to show like this. Okay, so let's move that one to the right. It will show like that. So far for the historical, we are done with it. We need to go back to make our projection. Okay, so the projection here, we need to make the orange slide. So let's go back to our presentation. The structure of financial model is input, processing, output sheet. So if we go here to the Excel sheet, we have raw data is our input. Assumption is our input. Working capital schedule and fixed assets debt is 3 of them. So let's highlight that assumption. Okay, this is input. This is processing sheets to get a specific result. Here, output sheets. We need to create a P&L, forecasted, balance sheet, cash flow ratio chart. So 3 of them, we have 5 outputs required. So let's start with the P&L. P&L here includes revenues, COGS, and so on. So let's go for revenues. Revenues equal to the assumptions we have. Let's delete that assumptions and go to the PDF, checking what the assumptions we have. We have revenue growth. C, let's read the future prospects. We have, upon reviewing the company's financial performance and market conditions, we expect our revenue to grow by 10% for the next 5 years. So this is our expectation. So let's go for our Excel sheet here and go for the first line, which is revenue growth. We will go here saying 10% and drag it to the right. So over a 5 year, each year we have a growth. So here's the trick. How to get the forecasted revenue? We will say the beginning balance, which is year 17 revenues, multiplied into, open a bracket, 1 plus 10% here. Then I make enter. Then I can take it, copy, paste formula. It's relative reference if you notice. So every previous year, I am going to increase 10% for the next year. So please confirm your understanding so far by writing 400 in the chat box, please. If you have any questions, please let me know. I need more interaction, so people which is not using the chat, please try to do that as much as you can. Okay, perfect. So let's continue. Thank you guys for interaction. Perfect. Okay. So what about the cost of goods sold? What is the assumption for that? So let's go for the management and say what they are seeing. We have working capital. It's a part of the balance sheet. Forget about it. Let's finalize the P&L first. So cost and expenses. It's both of them. This part, cost, this one, and expenses. So let's make that one. Zoom, yes. Okay, so let's see. We are facing increasing pressure from higher raw material cost and the transportation cost. If you are aware about accounting terms, the raw material cost will be included the transportation cost as well. So it will both increase transportation and raw material, which will impact our gross margin by raising the COGS. Here the COGS by 42%, 47, 50, 36, 35 of each revenue, each year revenue, respectively, 18, 20, until 2022. So for year 18, we have percentage of COGS of revenues, 42%. So here in our template, now it's easy to do it. Let's go for assumptions sheet. Let's move it here and go COGS as a percentage of revenue. Between bracket, it should be clear what is that percentage of. You can see here revenue growth. Between bracket, it change. Here we are showing it's a percentage of revenue. So let's come here and say 42%, 47% the next year, 50, 36, 35, and so on. So those percentage we got from the management discussion. They said percentage of revenue, it will be this much higher. So the gross margin will be lower based on that assumption. So let's complete that model by calculating revenues. Now I didn't going to do that because it's a change, not a change, it's revenue percentage. So I6, which is the revenue line for this year, multiplied into the percentage without one plus the percentage 42%, then enter. It will show like that. Take it, copy, Alt 4 to show it in this percentage. So it will be key assumption K8. Key assumption K8 is this one. Okay. there is a trick I need to tell you. It's not for anyone, for people I like only. If you're going to do formula, don't do it like that. Multiply the external source, which is another sheet. I prefer to do it equal, to the assumption, 42% multiplied into this one. Why I make it the opposite? How this will help? This is a good question. See, if I press here, I go here and I need to show the shortcuts for you. Yani, excuse me. It's not showing. I need to close and open the app again. Okay. Not showing yet. Please, if you have any question, let me know. Otherwise, please confirm with 500 in the chat. How to reduce the size of an Excel file? Just to convert it to, just try to remove the complicated formulas like SUMFS or some product, which is array formula. After that, you go for binary. Like here, save as. I will show it to you now. You go save as, browse. It's not responding. Hold on, please. And you select the location from here, as well the type of the Excel sheet file you need from here. Binary, that one. Third one, it will be less size, so it will save some time. So the keyboard shortcuts came back, thank you. So let's continue. So how to do it here? I will make tracking for the formula. I need to know where is assumption. Instead of going to assumption and I look for I8 and I select the cell, and instead of doing that, you can go here. The first formula assumption I8, I make control this symbol, this bracket. It will jump to the place which is the formula coming from. To go back, I press F5, then enter. It's a shortcut to save a lot of your time in tracking the formula. That's it. So let's go for salaries and the benefits. Salaries and the benefits. Let's go to assumptions first in the PDF. Where is the PDF? Here it is. Okay, so labor cost and the benefits will remain constant at 17 of revenues throughout 18 to 22. So benefits to the employees, this one will remain same, 17%. So let's come here and calculate, right here, 17% fixed. So in our example, it's a variable cost. So it will be this revenues multiplied into, or let's do it with our way, new way, assumptions, 17 multiplied into the revenues, then enter, copy, paste formula, like that. Okay, guys, please confirm with 600 your understanding so far, so we can move on. If you have any questions, please let me know. It's very important to understand the concept so far. We are going slow, I think. Okay. Okay, so thanks for your question. Please give me a relative question to our case. Otherwise, we can discuss later on about the questions which related to Excel. So rent and overhead, let's see what is the management saying about it. They are saying Rent and overhead expenses are expected to be flat at 15 million each year. So here we will go. For sure, the numbers you can see now in thousand. Okay, so we can write here in dollar. What is the meaning of that symbol? It's meaning that the amounts here you have, it's in thousand, it's converted to thousand, which means this one 28 million, this one 11 million, like that. So in the case here, they are saying it's 15 million each year. So let's go back to the Excel. It's 11, 11, 11, then became 15 flat. So base value. This is for rent and overhead. Okay, so let's go back. Why they didn't mention here anything about depreciation and interest rate? Can anybody answer my question? Okay, so the reason is depreciation is linked to the fixed assets. Interest is linked to the debt schedule. So we have here fixed asset schedule and the debt schedule, which will go and calculate for us the interest expense based on the balance sheet opening and closing debt balance. So this we will learn after we finalize the P&L later on. So this area, let's highlight it in any color, gray color, for example, from balance sheet, and this one from balance sheet as well. What about taxes? Taxes is easy. Taxes, they discuss here about taxes. It will be applicable, let me see, applicable tax rate based on our operating income is 28% for the coming 5 years. So it's fixed. So I go here to assumptions and skip rent. Okay, so skip rent and this stuff. Rent here, the template we can write here 15 million. Okay, and from here drag it or link it to that line. It's better to do it like that. Okay, so let's go back to what we were doing. The tax rate here, the tax rate equal how much? 28%. Let's go here, 28% of the earning before tax. So let's see, earning before tax, we will say equal 28% multiplied into that amount like this. Okay, that's it. This is the tax, and here the net earning, the formula which we did at the beginning of the Excel sheet. That's it. What is remaining is depreciation and amortization. This is what is remaining to do. So how to get it from balance sheet? Let's see. Now we are done with this part. Okay, I will be happy to answer any question. Otherwise, please confirm with 100 you understanding. And please, everybody, try to ask me or reply with confirmation so we can move on. I need everybody to understand the concept. Let's do that like this. Okay. Great. Thank you for confirmation. Let's go back, continue for our PDF. Okay, so as we said, working capital, we will keep it till the end. We will go to capital assets and interest, debt interest. So we have two schedules here, simple schedules, fixed assets and debt schedule. Those we need to fill them. So what is the opening PP&A? Which is PP&A, for the one who don't know, property, plant, and equipment, which is, we can call it fixed assets as simply term. So PP&A opening balance, we can go balance sheet. We need 13, right? So balance sheet. Here the closing balance. So I take it as the closing. Here 0, I assume it's 0. And closing is from raw material, from raw data, no, from balance sheet here. We can go to here, that one. This is 45, which is the closing balance for PP&A. Let's take opening balance equal the closing balance here and take it as a template to fill it down. Here closing should be opening plus capex minus depreciation and so on. So here is the simple term for building the depreciation schedule and fixed assets schedule. So capex, how much capex? This is assumption from their side. So capex here in our case started from here. Okay. So please, nobody play in the chat box. We need to save our time from these games, okay, and learn something today. So capital expenditure, we are planning to purchase 15 million of property, and every year we expect depreciation amortization expense to be 35 of the total opening EB for the next 5 years. Okay, so the percentage of depreciation is 35%. The property capex purchases to be 15 million. So let's here do 15 million capex and so on. Here the closing balance, we can remove all this area. Okay, we can start from here. The closing balance of year 17 is this much. So let's link it like that. Okay, so 15 million as a capex, increasing our PP&E closing balance for each year. So how much is the depreciation? I need to calculate it. The percentage is 35% of total PP&E for the next 5 years. So here I will say the opening balance multiplied into the percentage. So let's go here to the percentage, depreciation and amortization percentage. Let's fill it 35% and so on. So we are building a dynamic model. If we are going to build, if we are going to do depreciation here, okay, what if in year 2020 I plan to make it 37, not 35, the percentage of depreciation? So I will go here in the assumption sheet, the input sheet, to make it 37, 38, 39, whatever. So it will be simple as that. That's it. Thank you. So let's continue. Here, okay, the fixed asset schedule to make the depreciation equal the assumption 35% multiplied into opening balance of this year and drag the formula. Okay, so here it's minus, so I'm okay now. It's 37. We purchased new capex. We have depreciation was 13, so it's PP&E closing this much. That's it for PP&E. So let's link it. another way I need to teach you also the shortcut. I will go here, Control C, and go to balance sheet. In the PP&E line here, that one, right click, paste link. So it will be here, link it to the other one. Instead of going to do equal and go to the fixed assets, it's saving a lot of time, this shortcut. Okay. By the way, I have in my shortcuts here, paste link. It's number 5 because it's very important, saving a lot of time. That's it. So let's continue. Okay. So PP&E finished. And this sheet is finished. Let's make it in green and go to debt schedule. But before we go to debt schedule, let's finalize the P&L pending item, which is depreciation and amortization. I will link it to fixed asset schedule, this area. So it will be 13 from the opening balance. That's it. So the interest expense, how we can calculate it, and we can calculate the debt schedule here. We have opening balance also. Let's come here and go to the debt closing. How much? Equal fixed asset schedule, balance sheet schedule. We have here the debt balance 30 million in the year 17. So I will link it here. After that, I link the opening balance equal the closing balance of year, the previous year. So I will drag the formula. So the closing balance here, how to calculate it? Opening plus issuance, which is source of fund, minus repayments, sorry, minus repayments, which is the closing debt. Okay, that's it. So the source of fund, issuance, which is the source of fund. Okay, how to do it? Okay, so please confirm with 200 that we have the same level. And Ahmed and who? Dana and Ahmed, please stop playing in the chat box. We are in the university now, not in the grade 1 or 2. So please. Okay, thank you guys. Okay, so source of fund. How to get the source of fund? Through going to the assumption sheet and read the management discussion, what they said. So I'm sorry, I'm forced to remove some people, which is, I think they are not related to the college we have. So I will go to remove them. Where? Okay. Excuse me 1 second. Okay, so I think she left already, so I cannot remove her now. What Ahmed is asleep, but he is okay listening to us, no issues. Okay, so let's continue. The debt and interest. We have a schedule to repay 20 million in term debt in 2020. We will have interest rate of this much. So we will repay, no new loan to be get. I will not make any source of fund. I just will make repayment in year 2020 with 20 millions. So here, like that. So I paid and the remaining will be 10 based on that. So how much is the interest rate? 10% for the 5 years. So I will go here for the assumptions, going to interest to make it 10%. Okay, That's it. Okay, so I make the interest rate the debt rate 10%. So here we need to calculate the interest rate based on it. So I will take the closing balance. I prefer not taking the closing balance, the average balance. Okay, the average between the closing and the opening, multiplied into the assumption sheet, 10%, and so on. Simple term. So it's a 3 million, 3 million, 3 million, 2 million, 1 million, 1 million based on the average balance we have here. That's it. Let's link the interest expense. Go to P&L. Alt 5 for me. It will link automatically. So let's go here. The debt closing, I'll go also to debt schedule. Same like what I did in BP&E. I'll take the closing balance. Okay, and the debt schedule here, I will make paste link. So now I have the property and the equipment. I have the total debt. That's it. Let's see what we have left. What we have left is the main thing, which is working capital, which is need a lot of focus from our side. So let's try to focus. Okay. Before we go for working capital, okay, I see there is no change in equity and anything else. So let's move and make the equity as it is. They didn't discuss about it, so they are not targeting to raise capital or doing anything. So I will keep it as it is. Regarding the retained earning, as we usually know, the retained earning is the balance of income, the opening balance plus the income P&L the next year. So it will be cumulative, which is equal the previous year retained earning, which is 90, to make it cumulative, plus the P&L of the year, which is 26 million. So here we have the final P&L, and we have here the retained earning done, the equity done, debt, long-term debt. We have PP&E, which is fixed assets or non-current assets, and the non-current liabilities done. The remaining part is this part, which is called working capital. All this part is called working capital. So what is the meaning of working capital? This is a question, please. Anyone can answer, please, in the chat box. Okay. So working capital is the is our money in the market. Like you are investing money in the market, like you purchase equipment, you build your factory, this all fixed assets. This is the use of fund. So once you operate, you will start to do some facilities to the customers. Like you have a customer which you sell him your products, for example, 10,000. So this amount of money, they will not pay it in cash immediately. They will keep it in their store until they pay it, and they pay your money later after 1 month, 2 months, whatever. It's called accounts receivable. This is financing from your side to the business itself, to the operation. You are financing the operation with this money. So it's a short-term asset, which is called current assets. So it's a part of financing the business itself. Okay, so all this is the structure, the assumptions, the schedule. Okay, so let's talk like that. Okay, so assumptions and the drivers. This is the components of the financial model: income statement, balance sheet, cash flow, supporting schedule. Okay, this is the components. So the assumptions and driver, the historical, then assumptions and drivers, the forecasted, then forecasting the revenue, then forecasting the working capital, forecasting the capital assets, which is PP&E, capex, depreciation, etc. Forecast the capital structure, complete the cash flow statement. That's it. So working capital equation, we have 3 working capital mainly. We have receivable, payable, inventory. Because if you're going to have we're going, hold on please. Sorry guys, I'm back. So let's see what we are saying. We have working capital, okay, receivables, payable, and inventory days. What's the meaning of days? We have accounts receivable days, which is the accounts receivable, we have balance divided by sales multiplied into 365 days. So let's have example. The accounts receivable, we have like, we go to collect, we sell a product to customer. So we sell it today. After 30 days, he pay it to us back. So how many receivable days in I have as assumption? 30 days exactly. So this is the first assumption. So the other one, okay, payable days, same. I purchase something, when I will pay to them after 30 days or 40 days or whatever. So this is the payable days. Inventory days is the same. I purchase inventory, I put it in the store for 45 days, then I sell it to the customer. So this is the inventory days. That's it. So let's explain it in okay, let's explain something called, okay, the cycle of the business. Okay, what is the cycle of the business? As a business owner, you care only about money. Okay, it's caring about money. That's it. So we have here purchase, we here purchased an inventory. So from a supplier. So we have here day 0, day 10. So how much we purchased? 10,000, for example. Okay, so this purchase we did. Okay, so we received the inventory here. Inventory. We receive it in this day. Then we sell it in this day. So how many inventory days we have? 10 days. This is the first part. The second part, like that. Okay, so I pay it to the supplier, which I purchased the inventory from, in day 5. And in day 15, okay, I make payment. Okay, this is the payment. And here, day 5 and day 15. Okay, this is AP. So this is AP days, is 10 as well. Between selling Okay, let me make it in blue because it's a very important one. Between selling and collecting, like day 30, for example, and here we sell it in day 10. Between this and that, this is the receivable days, AR. Okay, so if I asked you, what is your operation cycle? If you are assuming the 10K is the only transaction you are working with, yani it's example, okay, the 10K SAR you are selling, or 10K dollar for a specific product, you purchase and sell it. So for sure you sell it for 15 or 12 or whatever, it should be higher price, so you make profit. But I'm talking the operation, how many days in the operation? The operation cycle, it should be receivable days plus payable days plus inventory days, both of them. So here I have, in the receivable days, I have from 10 to 30, it's 20. Sorry, not a plus, it's a minus. Okay, minus payable. Okay, plus here it's minus payable. So payable, how many payable days? It is 15 to 5, it's 10 days minus. What about inventory? Inventory from 0 to 10, so it's 10. Okay, so total operating cycle is 20 minus 10 plus 10, 30 days. How you can say that? Let's make it in color. Starting from 0 until 30. Okay, so from 10 until 30, it is the operation cycle. I start my operation here, I collect the receivable here. That's it. So another thing which is called the cash cycle, let me do it in another color as well. Okay, which is cash cycle. Okay, it will be, okay, the receivable days, okay, the inventory days minus the, yani once, it will be once we paid until we collect. It's about money only. So from paying until collection, it will be from 5 till 30. So it will be 25 days as a cash cycle. Okay, how to calculate that? It will be this difference. Okay, so it will be from 5 until 30. That's it for understanding the concept of working capital and how it's read by the owner, the business owners or the investors. So please confirm was 300 so we can move forward to calculate the forecasted balance of working capital, AR, inventory, and accounts payable, please. So confirm with 300, please. Great. So let's assume, get that from the assumptions, how many days forecasted we have. The accounts receivable forecast days to be 18 days respectively and 37 respectively. So receivable will be 18, payable will be 37, okay? So let's fill it here for all the periods. Accounts receivable will be, as we said, 18 days. And let's fill it. Payable days will be 37. And fill it in the assumptions. Also, we have we expect the number of days it takes to sell our inventory. You notice something the account receivable and the accounts payable is a target, but inventory is a assumption because it's based on how much we will sell. So we expect the number of days it takes to sell inventory to be 80 days in 18, 90 days in 90, 100 days in 20 and 22 until we reach 22. So let's fill it here. The inventory days, it will be 80, 90, and 100. It will continue 100 days till the end. Okay, that's it. That's it. So let me check where's the guy I need to remove because he making issues in the chat. I don't know why, but let me go and make it waiting room so he will keep there. So that's it. I need a confirmation with 300, please. Continue confirming. Okay, BNL is done. Let's highlight BNL. Okay, so accounts receivable, how to calculate the accounts receivable? Let's go back to presentation. Our presentation here saying there is two formulas. Accounts receivable, let me clear that. Okay, so first thing, accounts receivable is to calculate the actual, but here the formula is the opposite, to calculate the number of days. So it will be receivable days divided by 365 days multiplied into sales. So let's go here and say receivable days, how much? The forecasted receivable days. Open bracket first. Okay, so receivable days here in our assumption. Here, 18 days. I will keep it also dynamic, which is relative, divided into 365, close the bracket, multiply it into the sales, which is from P&L, sales of this year, then enter. It's simply calculation, simple calculation, then we can drag it. It will work like that. Okay, so the other one, the inventory, we will use the same also. We will go, no need to open a bracket, but just to make anyone read the formula to understand how it's spelled. So inventory days divided into 365 multiplied into the COGS, because it's a part of the COGS. The P&L related item is the COGS. And drag the formula like that. Let's go for payable account, which is also okay, that one divided by 365 multiplied into COGS as well, because it's contributing in COGS, and fill it like that. So we fill it the working capital. Now we fill the working capital. The checkpoint is still saying false. So anybody can answer why this happening like that? Nobody knows why it's still false? I need an answer. Okay, so the answer is because of this line. The cash balance is still not there. Yes, that one. So how to get this balance? So this is our target today, to know how much the cash will be, the forecasted cash. How to get it? Simply by building the cash flow statement, forecasted cash flow. Simply how to do it, it's very easy. It's just going to the net earning from P&L and link it to that one. We have 10 minutes remaining, so we will finish the cash balance in this time. So depreciation and amortization, okay, will be from P&L, the line of depreciation, this one, like that. So we need to fill it like that, Control R. So what is the change in working capital? The change in working capital here, it's based on if it's increased or decreased year over year. So before we go for that, we need to fill that template, which is working capital schedule. Just we need to get the accounts receivable, the difference in accounts receivable here, okay, the working capital from balance sheet. From balance sheet, working capital is for accounts receivable, here that line item, okay. Inventory is the below one, the payable is separate, so let's go and get it. From balance sheet, payable, that one. So now this one, I need to fill it like this. So what is the net working capital here? How much? Okay, this is a good question. Okay, so the working capital in year 18 is account receivable plus inventory minus payable, because payable is liability, so it's minus. That's why I make it like that. So the question is, what is the change in net working capital? So the change here, it will be that minus this. So here is the change in working capital. First year it's increased by 3,000, then increased by 5, then by 5, then decreased by 2,000. See here it was 27, became 24. So it's decreased, then increased by 2,000. So from this table, I need to say something. So this is cash in or out. Here, it's the 3,000 increased. So I have balance of 13. Then accounts receivable and inventory and payable increased by 3,000. So my money in the market increased the working capital, which means as I said, okay, in Arabic term we say my money فلوسي في السوق. Okay, my money in the market. We are saying like that in Arabic language and in English language. So my money in the market is increased. So I am investing. So I am paying more money. So it's a cash out. So I'm losing that 3,000. So I need here in the cash flow to say equal the working capital, change this one. Okay, and fill it like this. Okay, once I fill it here, you notice it's a minus. First one plus first one minus the net working capital, because it's a cash out. That's why we are decreasing. So cash from operation, as we showing here. That's it for cash from operation. Investment in CapEx, which is from assumptions or from fixed asset schedule, we can link the CapEx from here. Like this. Okay. Then we have issuance of debt. Did we issue any debt? Nothing at all. So how much we repaid I will go and link it to this schedule, which we have it here, and drag it to the right. So it will be minus cash from financing outflow. That's it. So the difference here will be like that. Okay. So cash repayment. Okay. Sorry, by mistake, it should be on the first line, not that line. So I will take it Control X, Control V, and drag it. So here the issuance of equity and the repayment of debt, and this line is for equity, which is nothing is there. We said it will be the same. So please confirm with 400 that you understand so far. If you have any question, please write it in the chat box. Okay, perfect. So we have this transactions. So let's link that cash balance to here, to the closing balance, cash balance we have. Then finally, it's showing true. That's it. This called the closing the balance sheet, forecasted balance sheet well, which is we have total shareholders equity and liabilities are matched with the total assets. So we are done with the three deliverables now. P&L, balance sheet, cash flow. Okay, so we reached that checkbox is okay. We need to highlight the checkbox as we did here in green, and this one, the main checkbox we have. So now we are comfortable with our model. It's working dynamically. So for example, I came here and I said, the revenues will grow with 20% first year, 15, 16, for example. So I should go to P&L and I see the figures increased and everything is linked well, nothing impacted. And you notice inventory, accounts receivable, inventory, property, accounts payable, whichever related to the revenues have dependency on the revenues, it will be impacted. So please continue 400 for confirmation, please. If you have any questions, please let me know. So here we have working capital schedule, fixed assets schedule. Okay, this is the processing sheets. We have assumption, which is input sheet, the only place we have to make inputs. Here the output sheets, we have those three outputs. Okay, so we are left with ratios and the charts. We will discuss that part in the next session. Okay, so I'm happy to hear any questions because our time reached 8:30. So we should be done the three financial statements which we built together. So please, any questions, I will be happy to answer. Okay. Okay, so Muhammad, you are asking. The next part, guys, will be next Thursday at the same time from 6 till 8:30. We will have break in between from 7 till 7:10, so or 15 maximum. So this is the next session. We will discuss the ratios. We will discuss the charts. We will also going to discuss the valuation methodologies. What is the types of valuation, and we will also use the same model to build valuation for this company. How this company works from using this DCF model, which is discount cash flow. We will learn this next time. Okay, so please, any questions, I'm happy to answer. Otherwise, 400 for confirmation your understanding. Let's go for Donia. She asking, you need to know the difference between the types of errors inside Excel. Okay, so the types of error, let's wrap this up quickly. The types of error, if I make this one divided by 0, so it will have this error. This is the first error. If I make VLOOKUP, this error, if I make the name not correctly, VL only, if I make VLOOKUP, okay, this part, okay, so it will show not applicable, which is not exist in the list, which you are looking for. So this is the types of error, Donia. Thank you for your question. Guys, I'm happy, Muhammad Masoudi, thank you for your questions. Please, anybody have a question, please ask me. I will be available for some time. You have 5 minutes to ask me any questions, Q&A. You are welcome, Dunya. Okay, guys, no questions from your side. Thank you. Please confirm with 500 that you are delivered and everything is okay. For any questions, please. Thank you, Muhammad. Thank you, guys. Happy to see you today. Thank you, Dunya. It's clear for everyone. I hope so. Thank you, Talal. Thank you, Ruba. Thank you, Dana. Thank you, Roa. Okay, Bushra. Thank you. Okay, guys. I'm happy, Wasal, also to have you there today. So see you in next session, and happy to talk to you today. Thank you. Bye-bye. Peace.